Some people think that trading's only for young people. Is that the Japanese yen? Brilliant stuff. Insane. That's absolutely marvelous. Look at that. Look at what it's doing for us. Absolutely perfect. We'll talk about that in a moment as well. And we're also going to talk about how you've got an advantage as an old person actually trading. Ladies and gentlemen, fellow traders, friends, welcome to the live show on this wonderful Thursday. Well, for me, it's afternoon. For you, it might be morning. It might even be evening. I don't know. It depends where you are in the world. But welcome to the live stream. Lovely to have you on board. And I hope you're all going to ask your questions and get involved in the chat and have a little bit of fun with us today, as we always do. I don't sit here and take little 1 hour, 5-minute trades and things like that. I actually show you something valuable, something worthwhile. Hopefully it's valuable and hopefully it's worth something to you. Hello, Blue Mango. Good to see you on board. Lovely to see you. What do you think of the Japanese yen then? I'm excited. It's going down. It's going the way I wanted it to. Apart from this, I knew it was going to hit this, what is now support, and kind of try and bounce out of it. There's a lot of liquidity in this area, which is going to stop it from just falling straight down. But you look at what's happened. Look at what's happened. BOG monetary base. In other words, the money flow, right? The money that they put into the market has reduced. I mean, they expected minus 12.5%, now minus 13.7%. In other words, they're making the currency go down in a stealthy way. In other words, they're actually trying to push their currency stronger again. They're going to do that. They always do that. They always find a way. I'm not sure if they lifted the interest rate or not. I didn't actually see. But anyway, that was the expectation as well. So yeah, they've moved the money around, and it's the amount of money that they put into the system. If you guys understand how money works, it's kind of a funny thing, money. You know, money is not you know, people think, oh, we get paid and we pay tax and that's how we support the government. But just think about it. The government makes the money. They create the asset and liabilities of the country, and they put money in the system for you to use. So all they're doing is taking some of it back effectively. The money at the end of the day is effectively the amount of money that you've got to play with. It's like Monopoly. They give you a certain amount of money. You got that amount of money to play with, and you try and make some more. It's shared amongst the population. There's only a finite amount available until they put some more in or take some out. So they fill up the pool and they take the money out as they need to. And that's what will affect the value of the currency at the end of the day. And it is based on asset and liability and that sort of thing. It gets quite complicated, actually. You don't need to go into all that. But yeah, they're gonna manipulate it, that's for sure. They are gonna move it around the best way they possibly can. So I hope you're all well. I hope you're all going good. Look at that Japanese yen. Insane, isn't it? But we are going to talk about old people as well, and why us oldies have got the advantage over the youngsters. I'm going to tell you a story. I watched a video recently. Interesting video. Look at this, is gold. I was calling gold long, but there's a bit of a red dot on this one. And there's a bit of a green dot on the Japanese yen, and I'm thinking, what are you doing? And you just go the way I want you to. But anyway, saw this guy in a video, youngster, says, I get up at 3:30 a.m. in the morning so I can prepare for the market. So it's a life in the day of a trader or something. It's a popular thing, you know, whatever the case. So I saw this and I thought, what are you doing at 3:30 a.m. in the morning? I get bored trading at the best of times. But we get up at 3:30 in the morning and we start preparing for the markets, do we? Well, that's news to me. I've never done that. I don't think I ever will. You see, when you're older, you've got a little bit more experience and you understand the world just a little bit better. And you're a little bit more patient with things and a little bit more calm. And we don't need to get up at 3:30 a.m. to prepare for the markets. Goodness me, what are you doing between 3:30 a.m. and 9 a.m. in the morning? What are you preparing, for heaven's sakes? Are you reinventing the wheel? Sounds amazing. Hello, Elaine. Good to have you on board. Lovely, happy Thursday to you as well. Lovely stuff. See, we're all coming on board now and we're all starting to pitch up. But yeah, this is gold. Gold's looking good. So far, we're happy with gold and we're happy with the Japanese yen. That looks like it's going in our direction. What's not going in our direction is the ASX 200. That one has decided to sort of bounce back and do some kind of retest. All right, I'll accept that. That's fine. It's still in trend. It's still going down, and we are short. So hopefully it'll carry on going. Johnny mentioned yesterday, Great British Pound, Canadian dollar. I think it's joined SpaceX. Look at that. It's going off onto the moon. It's really jumping, isn't it? It's on the jump. So yeah, that's going to the upside, and it's moving fast. And I thought, well, the Canadian dollar is moving quite hard. You know, it's moving hard. Great British Pound, Canadian dollar, US dollar, Canadian dollar, moving like crazy, going upwards. So I thought, well, we'll take the long on this. Aussie dollar, Canadian dollar. Yeah, it didn't work out, did it? But that was on the last live show. We did that on Tuesday. We took that together, and it's sort of lost momentum for whatever purpose. I mean, it was looking good, quite good there. Now it's just lost its momentum. So obviously the Aussie dollar has got a different way of thinking to the Great British Pound and the US dollar. But what didn't work out? Bitcoin, we called it short. It hasn't gone short yet. It's sitting around here in the support level. I thought it was breaking down. I thought it was ready to go, and it's come back into the support level again. It's hanging around here. It's not leaving as it stands at the moment, so it's hanging about, waiting to go. Maybe it will go one day. We'll see, but I'm expecting it will. No, trading's 50-50. We never know. Yeah, gold is going up. I told you it would go up. Didn't you listen to me on Tuesday? I told you gold's going to go up. In fact, I told you last week that gold's going to go up, didn't I? And gold is going up. Look, yeah, there we go. Gold is bouncing out of the support and starting to go up. Look, it's just finding its feet. You know, everyone's calling it short. Everyone's going nuts. Here's the thing. I mean, gold was at 5,500 the other day. Now it's at 4,000. 4,000's a round number. How many times I told you guys? Round numbers, man. Round numbers are so important. Human beings live for round numbers. You're not trading against lines. You're not trading against algorithms. You're not trading against wicks. Do you know what you're trading against? With human beings. Other human beings that want to buy and sell things. They want to buy and sell things in the market. So they all have their own way of thinking. Don't worry, Random. I'm just having one of those days. Don't worry about it. I love that. You can ask anything you want, and you can say anything you want as well. I really don't mind. I'm having a laugh today. Don't worry about it. It's all good. And I love the fact that you even mentioned it. But I did tell you that gold's going to go up, and it is going up. It's going up pretty well. It's all good. No, I'm not getting at you at all, and I'm not getting at you at all. Please don't think that. I'm just having a bit of a moment. Yes, here we go. And of course, then we've got oil crumbling down into the ground, crumbling down, falling off the bus. Waterfall, there we go. How much further can it go? Well, at the moment, it's just sort of milling around, and everybody's wondering if it's going to go further. Yeah, it's going to go further. It's probably going to go further, especially with Hormuz just pushing the oil barrels through, and it's all hunky-dory. What's amazing to me is the fuel price goes up by that amount and it comes down by that amount. It doesn't make sense, does it? We're always getting ripped off, aren't we? Every single time. Anyway, Euro Great British Pound. Euro Great British Pound we thought might bounce out of the support and go long, but it didn't. You know what it did? It went short. It broke down. It broke to the downside. Now, you could get in short here and carry on with it and follow it down, but it's actually a good idea to wait for it to come up and bounce. Retest. Retest, they call it. You know, most traders out there will tell you to wait for the retest. I normally don't bother, but in a case like this where it's broken so far, I actually will see if it goes back and retests before I get involved in it, just to see, because it's already quite far out, and it's like you missed the bus, whatever the case. You know, that's the main thing. You know, trading. People think that trading is for youngsters, and it really isn't. It's for everyone. And older people have an advantage, and they have a massive advantage over the youngsters, and that is life experience. So much life experience that older people have got. The ability to be patient, the ability to understand things in the world, and the ability to understand fundamentals in the world as well, because you've been watching news since you were 4 years old, and now you're 60. So, you know, it's kind of like you've got this advantage, but not only that. You know what other advantage you've got over the youngsters? Financial advantage. 9 times out of 10, older people have built up some form of wealth somewhere through their life. So even if you've never been in trading, never been in investing, never touched a trading platform, and you just go on pension. You've got the advantage, you've got capital. Most of the time you've got capital and you've got work experience. You've dealt with people, you've dealt with life, you've dealt with hardship, you've dealt with good stuff, and you know where you are in the world. So you've got quite a good advantage over the youngsters when it comes down to it. Just think about that for a moment, just a moment. I'm in a trading group where we supply and demand. I'm not sure it looks the same to me, like support and resistance. Can you help me out? I'm not sure which one to trade, supply demand, or is it quite the same for me? Random, you know what you know, if you look at supply and demand, right? So supply and demand, what you're looking for, obviously, let's just see here, like there, okay? There's an area, right? Supply and demand, okay? So now there's an area of liquidity, an area of money, and that's what you're looking for in supply and demand, right? There's your big 3 red candles. You need 3 candles and a green candle before it to pick your area. So that's your area, and then now you've picked your liquidity area. Now, the whole point here is if you're trading with supply and demand, the areas are much closer, all right? So they're much nearer to you. In other words, there's an area there, and then you're looking for it to come down to whatever target. You're looking for long areas. There's an area here, right? Sometimes they work out together. That one's right on the support level, for example. There are other areas here. Let me find one. Here's one here, down here, for example. Another supply area right there. So that area is very close to the support as well, but they're not the same, all right? And they don't always work as well as support and resistance, because clearly, as you can see here, that was an area. It comes down, it takes it once, only once, and then it goes up. There, it took the money and it went, but you only got one try. And then it came back down and it broke straight through it. So now it's a worthless area. It doesn't work anymore. So the difference between supply and demand for me is with supply and demand, obviously you can use it. I mean, you can use any system you want in the market as long as you apply the strategy. The important thing to understand about charting is charts don't make you money. They don't predict the future. Win rates don't make you money. What makes you money is your psychology and the way you trade, your strategy, making more on your wins, losing less on your losses. So whatever system you use, whatever charting system you use, is going to make absolutely no difference to your result. Your result is going to be based on you. Your result is going to be based on your strategy. Your result is going to be based on how you manage your risk. And at the end of the day, how much you intend, or how well you manage that risk. And if you keep it the same, and what your strategy is to make more on the wins. So even if you use Ichimoku, if you use Fibonacci, if you use moving average crossover, you're going to achieve a similar result based on your psychology and how you work. So if you want to use supply and demand, that's 100% fine. If you want to use support and resistance, that's 100% fine. Just for me, the system differs in this way, and that is a support level gets hit a number of times, and it's a level where I know that the pros, the institutional money, always puts their orders. It's always there. And a resistance the same. Okay, so I know the resistance is where they always put their money, and the support is where they always put their money. Whereas supply and demand is a one-time thing. I could see that they pushed the price and it shot down. So there's an area there that's important, right? Because they pushed the money away pretty fast. So you got one chance when it comes back to take that money, they're going to, it probably, in all likelihood, this is how that system works. In all likelihood, it'll push it again because there was money there to start with. So that's how that system works, where institutionally with support and resistance, the money's always there until it's not. For example, on the end here, you see it's a breakdown. Now, it's like I've always said to you, it's like chipping at a wall. If you're a prisoner trying to chip out of a prison, you know, you're going to chip away, chip away, chip away, chip away, chip away. And every time it hits there, it gets pushed away. Every time it hits there, it gets pushed away. Every time the guard comes to the door, they quickly put all their stuff away, and then that stays, right? And then one day you get through the wall, it breaks through, and boof, the prisoner's running away. Okay, and off he goes, right? That's the breakdown. And then often they'll come back to check if they left anything behind. So come back for the retest. Now it depends if the guard's waiting for him or not, or if it's going to carry on going from there and bounce back out and keep on going. So your support and resistance is more reliable in the sense that, you know, you got more than one chance. Firstly, you're pretty sure that the money is there because it's been hit for a number of times. It keeps taking the money at that level, so it's an important level. It's a level of importance. It's a level where the big money is buying and selling. So it gives you a clear indication as to where the money is. So, you know, it's a personal choice at the end of the day, which system you prefer to use and which one's easiest for you. I always say, don't get caught up in the never-ending cycle of doom, where you keep going and looking for that next new shiny tool or the next best thing, because you're just going to confuse yourself and you're just going to start, you know, adding too many things to the chart. So, you know, I'm not trying to advocate that you must use support and resistance. I'm not trying to advocate that you must use any other system. What I'm trying to point out to people here is that trading doesn't make you rich overnight. That's the one big thing that I'm trying to point out to everyone. And I'm also trying to point out that you need a strategy and you need to manage your risk. And the strategy is to make more on your wins so that you can make a profit. You need to stay in the game. And that's the important part. And that's what I'm trying to put forward to everyone. So my system that I put forward here, which is basically support and resistance, or even supply and demand if you want that, is not as important as the actual way that you approach the markets and the actual way that you make money. And that's the message I'm trying to get across to everyone. The message is how you approach the markets and how you manage your trading. That's the important part. Okay, hi Rob, I'm going to show you. Can you help me? Right. My ex-wife has my capital. Mickey, sorry, man. That's bad. That's the disadvantage of being older. Some of my older friends have had 4 wives, 5 wives, that sort of thing, and that gets expensive. I'm one of the fortunate ones, hasn't had that problem. I'm trying to get out of depth with trading. Second income next to my job one day, full-time trader, hopefully. Yeah, random. The trouble is, you know, the difficulty is trading is a good way to build wealth, but if you don't want to land yourself in a desperate situation if you're trading as well, because you know it's not the type of thing that's going to just pull you out of debt suddenly. It's not a get rich quick scheme. This is like any job. It's like any kind of work that you do, and it takes time to build the wealth. So yeah, it's useful and it can make you some money if you learn how to do it properly and all the rest of it. To get to full time, then you've got to make sure you've got the capital to go with it, to go with the full time, you know, and that's where the big issue comes in. A lot of people jump in too early with too little capital, and then you struggle to make that money that you need. If you get enough capital together, then for sure, yeah, then you can go for it. You don't want to work on too much borrowed money as well, because that can become an issue as well. What liquidity is Euro, Great British Pound using now, do you think? People who weren't using stops. I'll have a look at it now. It's all a bit of a mystery to me. No, I think get rich quick, just make some money on the side. I don't think it just make some money on the side. Yeah, just make some money on the side and just grow the account. Just grow the account slowly and be patient. As this is the whole title of the video today, you know, as oldies, sorry random, I don't know how old you are, you might be young, but as older guys have got more patience and we understand the world a little bit better. We also understand that things take time. They don't just come to you. So yeah, a little bit of money on the side and maybe grow the account. And when it grows to a level that you feel, hey, I've made some dosh here, this is good, this is looking great, then you can sort of go, well, you know, I don't need my job anymore. I'm making more money on the private than I am at work. So, you know, I can make my money here. Yeah, I mean, when I was 27 years old, I made that move, and I jumped in both feet and somehow made it. But a lot of people don't. So do be careful of that. But that's what I say. When you're younger, you do stupid things, and while it was a stupid thing to do, it worked out. So, you know, that's always great. What's actually happening now? You asked about the liquidity imaginary on Euro, Great British Pound. what you got to see, what you got to figure out is when it breaks down. So the sell orders, what's holding it up here is all the orders, okay, holding it up, and they all want to sort of push it back up at this level, but it's run out of steam. There's nothing there to hold it up anymore, and it's all selling. So everybody's selling off, and it's just pushing down now. And there's a whole bunch of people in there that will sell it down to the next level where there'll be something to hold it up effectively. Think of it like if you go to war and you put sandbags out, or if you're trying to stop a river from coming into your house or something, you put sandbags out. It's like stopping it, and trying to push it back, and then eventually it breaks it away and it comes flowing through. And then there's a whole bunch of other sellers just waiting on the other side to just sell it off, right? And the same with the buying, like there's someone there just selling, and then it breaks through, and there's a whole bunch of people to come in there and buy it. What you got to be careful of with these is when it breaks and there's not a lot of liquidity to go with it. So in other words, it can move just on price alone without the liquidity. So there'll be less liquidity, but lots of selling, and then the price moves anyway. And you got to watch the volume on that as well. If there's a lot of movement and no volume, that can also be a little bit of a tricky scenario. So yeah, well, I'm pretty chuffed about the Japanese yen move. That's good, apart from this little red candle here, which is giving me a little bit of a headache. But yeah, I think it'll carry on from here. It might actually jump further down. All right, so good morning, Beverly. Haven't seen you for a while. Good to have you on board. Lovely stuff. Okay. 38. If you're 38 random, you've got a fantastic advantage of one thing. Okay. One thing that all the 60-year-old traders don't have, and 50 maybe you can still do it, but the 60-year-old traders don't have it. If you watched my last live show, I showed you something insanely important, okay? And that is most of the money comes from investments. My side too, right? Okay. And I didn't listen when I was your age. I should have, but I didn't. And I used to ignore people when they said to me, you need time in the market. Create an investment account for yourself. You won't regret this. I promise you. Go and watch my last video and see how much money it will become. All right. I will probably be gone when you are that rich, but if I'm still around, you can buy me a coffee. All you got to do is choose 5 to 10 of the best shares around. You don't need charts for this. You don't need charts for this at all. You just need to use your head. Think about it. What do I think Amazon's going to become? What do I think of McDonald's, Coca-Cola, Nvidia, these big shares, not small penny rubbish shares, decent shares, shops like the Walmarts, the big shops, like, are they going to go down? Are they going to go up? You shopping there, just think about it. Look at their assets and liabilities, who's running them. Does it look like they're going to go well? You buy them with what money you've got, and then you set and forget, right? But you put money in every single month, as much as you can afford. Hopefully $1,000, sometimes $500, even $100. Just keep adding it every single month. If you can do it for the next 30 years, you'll be like Warren Buffett. If you can do it for the next 20 years, then you'll be a sort of wealthy guy, okay? 10 years, you won't be unhappy. Let me tell you something. Do that. If you get to the point where you have $100,000, take $90,000, put it there, take $10,000 and trade with it. If you get to the point where you have $1 million, put $900,000 in that investment, take $100,000 and trade with it. Believe me, it's going to pay you well. And at the end of the day, you also, through all those years, you're going to pick up all the dividends. You can decide whether to take them out or put them back in. And on top of which, you got growth shares, and they're going to grow, and they're going to be worth an absolute fortune at the end of the day. It's up to you, but that's the way you're going to get rich. If I find a young person like yourself and I can tell you, listen, this is the way to do it. You can ignore me. You can tell me I'm mad. You can tell me, but I want to trade. You can still trade. Take 10% of the money and trade. Take the rest and invest to it. And if you don't have a capital amount, do yourself a favor. Just start putting in an amount every month and grow that investment account, an equity account. And that will take you far. Even if you can only afford one share of a particular company right now, it's fine. You can add to it as you go and grow that account. It'll grow for you and it'll become, well, something worthwhile in the future. Johnny, good to see you again. Lovely. Yeah, you see, 38, becoming 39 6 months, 45k in debt. What the hell? Yeah, I get it. We've all been there, right? We've all struggled. And the thing is, if you want to get forward, if you want to get ahead, that's the way to go. That's the way to go. If you watch that last video, that last live show that I did on Tuesday, I think I gave you the information about 5 or 10 minutes into the video where I showed you how much money can be made. Actually, what I'm doing, I'm taking that live show, I'm cutting that piece out, and I'm going to put a video out for you guys tomorrow where you can actually just watch that piece. Okay, so wait for that if you want to. That'll just give you all the information that you need. Okay, just a question, are you into options? I'm into a lot of things. No, I'm not trading options at the moment. At the moment, because I've got ability in Africa to trade with contracts. The contracts are good enough for me. It's fine. Okay. No, I don't do options at the moment. But I had a friend who used to do it, and he had a way of he used to create this whole scheme in there with buy this and sell that and put this one together, and it was so complicated, and he would generally just about lose nothing. It was amazing. You know, you would do the puts here and the calls there and just put this whole project together, and it's all one package, right? And then just about no matter what you did, he couldn't lose. It never quite made sense to me, but he did a fantastic thing there, and it was brilliant how he used to run with those options. Amazing stuff. But no, I'm not using it at the moment. Bitcoin traders are weird. Told me to buy Bitcoin, was probably going to 38,000, and then started yelling at me. He started yelling at you. Yeah, they seem to a lot of guys, they seem to get married to Bitcoin. It's like their wife or something. So when you insult it, you really make them angry. So yeah, I don't know, it's a bit weird. It also might be a scammer or something like that. Just be careful of that as well. There's a lot of that in Bitcoin and crypto and that sort of stuff. So you got to be careful who you deal with and what you deal with. But yeah, no, I actually find that I find that too. They can be quite touchy at times. For me, it's just a question of it's gonna go down for now, and then eventually maybe it'll find its feet, maybe not. We'll have to see. The whole problem with crypto is it is built on fresh air. It's not built on any solid asset base or asset value. It's got no backing, nothing holding it up. So it becomes quite a strange thing if you think about it. But yeah, there's no need for anyone to yell at you if you don't. You know, if you don't want to trade the same way I do, I'm not going to yell at you. I don't care. It's totally weird, isn't it? Yeah. Where can I buy shares, Rob? Can you show me how to do it? Sorry. Oh, look. Okay, so I'm not sure what area you're in, Random, but always find a broker that's in your local country, right? Your country would be good. I mean, obviously, the closer the better, because you can build a relationship with them. So it's an equity account that you're looking for. So what you're looking for is a broker like IG or something that can provide you with an equity account, not just a leveraged, account like this. Not just a contracts account, options account, or whatever the case. You're looking for a solid equity account where you can buy equities on a one-to-one, not on a leveraged account. And then what you're looking for is one of those accounts where you can pay minimum amounts. In South Africa, we've got a fantastic product that was developed by Purple Capital called GT247, easy equities they call it, right? Where you can actually pay very minimal fee per trade or per purchase, and it's amazing, absolutely amazing, cheap and easy, and you can buy the equity and hold it. But very frequently you'll find that a lot of the banks will offer that. A lot of the banks will offer you equity accounts as well, where you can just buy equity and hold equity for forever, and it's safe. The safest place I would presume would be the banks. I do hold with a couple of accounts in South Africa with different companies, and then I've actually got offshore as well, so they allow me to hold products in America, in the UK, that sort of thing is called offshore accounts. If you want to do offshore as well, which sort of hedges you on your currency, especially in my case, when you live in South Africa and your currency was quite weak for quite a long time, then it sort of hedged me to have dollar accounts and pound accounts and things like that. So equity, you're looking for an equity account. They frequently, some of them do offer you charting and things like that, but frequently you don't get charting with it. It's an equity account, right? And but you can get charts off Yahoo, as I've showed you here, and that's if you really want to look at charts. But buying companies has really got very little to do with charts. It's got to do with price to earnings ratios. It's got to do with dividend yield. It's got to do with asset and liability value. But the best way to choose the company to buy is to think for yourself. Just think for yourself. Like, I mean, if you're buying a shop and you shop there and you see it's looking good, it's growing. Like I said the other day in one of my videos, like if you want to buy McDonald's, for example, and you see all the McDonald's around you are still selling lots and lots of hamburgers. People are walking out in their droves with hamburgers. They're lining up in the drive-thru to buy hamburgers. Now, I know McDonald's says that they're in the property game. Rubbish. They sell hamburgers. And if you can see them selling lots of hamburgers, then the company's working, isn't it? It's doing well. And at the same time, yeah, great, they buy lots of property. Wonderful stuff. But if they stopped selling hamburgers, what would that property be worth? Because who wants to buy an hamburger store if nobody's buying hamburgers? So while they say they're in property, they're in hamburgers, okay? So if you see lots of takeaways being sold all over the world at these stores, and it's growing and it's getting bigger and it's looking good, you don't need a chart to tell you. That's a good company to invest in. That's decent. And then you just got to decide for yourself, look, am I looking for dividend yield, or am I looking for growth stocks, that sort of thing? Good to balance it out though. Get some good dividend payers, get some good growth stocks. You know, that's good for an investment account. The Bitcoin people only know why they got lucky. Now their luck has run out. Luckily McDonald's is hiring. Yeah, well, that's one of the big things. You know, the funny thing about Bitcoin, lots of people laughed at me because for years they said to me, Rob, you got to buy crypto, you got to buy Bitcoin. And I said, no, I'm quite happy investing in my shares. I know that they got some asset value. I know what's going on there. I can see the companies, I can hold them, I can touch them, I can go to them. You know, I can even meet the CEO if I want to because I own some shares. I can go to the shareholders meeting, whatever the case. That's, by the way, if you own shares, you can do that. You can attend the shareholders meetings and that sort of thing there. You know, you're invited. But anyway, that's if you want to go. But with Bitcoin and crypto, you can't. So I used to tell my friends and people around and whatnot, I'm not interested in the Bitcoin and whatnot. And a lot of them really did well out of the Bitcoin. They got rich and everything was going well. And they were like, look at this. And I was like, yeah, well, my portfolio is doing pretty well as well because it's growing with shares. And now, I mean, the value that it's lost overnight, quite scary. Well, my investment portfolio hasn't lost that value, has it? That's doing all right. That's holding on, just, you know, fine. So yeah, crypto, it's fresh air. It's difficult. So they did get lucky, yeah. Should I put stop loss when I buy share, not trading? No. Stop loss is not for investment, okay? You don't stop out of investments. Investments, you will have situations where there are crashes in the market and corrections. And you cannot call when to buy and sell a share. You can't time it, right? It's time in the market. If you buy shares, you buy them, you set and forget and don't worry about it. Let it run. It's going to go up and it's going to go down. There's no stop loss in that, okay? It's one-to-one. What you can do mentally is this with investments, right? Is let's say you buy a share let's say you buy a lovely share and you think, oh, I'm pretty confident that this is going to go well. Let's say it's McDonald's, for example, and you own it and it's all going well and everything's hunky-dory and hamburgers are still getting sold. And then suddenly one day, nobody likes hamburgers because they've all become fitness, health things, and they don't want hamburgers anymore. And their company starts going down and things start looking bad and things start falling to the wayside. Then what I always say is it's not a stop loss. What it is you look at the investment for what it is, and you see, look, this is going to go bad. This is not going to go well for me. And then what you do is you go, all right, I need to sell McDonald's and I need to take all that money and buy something else. Maybe a bank, maybe another takeaway, maybe a retailer or something else. Maybe I need to put it into Woolworths or something to that effect. And then just go and take all of that money and move it into something else, if that happens. But it's not a stop loss. That's a question of just keeping an eye on your portfolio, keeping an eye on the companies that you're invested in. And if you see there's a problem within the investment, then you take that one and you move it to something else. Now, keep in mind that if you just buy 10 shares, right, just 10, you might not be able to afford 10 in the beginning. You might be able to afford 1, 2, or 3. But eventually, overall, you want 10 or more. Because if you've got 10, if one of them goes bad, that's only 10% of your portfolio. Remembering that you 1-to-1 on it, you're probably not going to lose the whole share unless it's an absolute disaster. So you'll lose a percentage of that share. So the percentage loss on your overall portfolio is so minimal. It's crazy, which is what makes investing a really, really positive game. And if you understand this and know this, it's going to be that much better for you. If you're using prop firms for trading, I mean, that's fine, but you can't invest with prop firms, right? Okay, and if you're not using your own money, so for the time being, Random, the best thing you can do is carry on trading, because if you don't have the capital to invest, well, there's not much you can do. But if you do have some spare capital, rather than taking debt and having a $45,000 debt, for example, with some credit card company or whatever the case, rather than paying that back, right? Well, you've got to pay it back first, but rather than taking an extended debt on top of that or more debt, once you've got cleared of the debt, and if you've got some spare cash, some spare money to use, don't take more debt. Rather take that money and start paying it into an investment account when you're as young as possible, and do that for the next 30 years. And you'll have an insane amount of money when it all ends at the end of the day. That's how it is. That's how it works. Okay, there's nothing I can do about whether you have the money or not. If you don't have a capital amount, you don't have a capital amount. That's 99% of human beings. But if you can find a way to spare some cash out of your income and start paying it into an equity account and start buying equities of some note. I mean, you won't be able to buy Berkshire Hathaway, for example, because, I mean, it's $60,000 for one share, whatever. You can't afford it, right? But you will be able to buy some of the smaller companies that are maybe $100 for a share, or $50 for a share, or $200 for a share. You might be able to buy into those and start building those portfolios as you go. I think Coca-Cola is about $70 a share or something like that. You know, you can buy into those companies and they'll grow over time, slowly but surely, right? That's the way to make money. You know, student loans, it's sad, you know, when you think about it, so many student loans, and people take student loans to become something, and then you struggle to pay them back after you've studied to become a doctor, a lawyer, whatever the case, and then, you know, and they just, I tell you, they bleed us dry, really. It's not right, is it? Certainly not right, but I'm with you on that. You have to pay that damn student loan back. It's annoying. Legs of a trade. Most companies buy the land, build on it, and then sell it to others with a long-term lease agreement to free up the capital. Yes, that one is a popular one. That one is a popular one. Free up the capital, lease agreement, that whole, it's quite a complicated thing. But if you can do it that way, that's great. The whole, I had a whole plan when I was younger about the whole property pyramid thing that I'd worked out, And you buy one, then you get loan for the next one, and so on and so on. And yeah, it actually does. It's a good thing. It's a way to free up capital. Because you lease it or you borrow against it, and you free up capital that way. Stop losses are only necessary when leveraged or not well diversified. Yeah, stop losses are only necessary when you're leveraged. So for example, in prop firms, or when you're using a contracts account, or when you're using leverage trading with cash, that's when you need a stop loss. Okay, you don't need a stop loss for investments. Investments don't use stop losses. It's not necessary to have a stop loss in an investment, because you can only lose a portion of your your dosh, and you're trying to grow it. Okay, so don't go there. The whole question of you know, there's another school of thought, you know, just for random talking about debt. There's another school of thought that you should just stay in debt all your life, and the more debt the better, because you're just gonna die without it anyway. So and I get that's another way of looking at life. And exactly what Mickey said here is like, you buy the land and then you lease it, or you borrow against it, you move on to the next one, and so on and so on and so on and so on. You just keep building more and more and more debt, and you keep growing income to pay that debt. But actually, there are better ways to do it. I mean, if you can grow a positive income, that's actually better than just being in debt. So you can do it either way. It's entirely up to you at the end of the day. But I find it better to have the cash positive than to have the cash negative. But yeah, some people like to work with a cash negative, and it works for them. There's nothing wrong with that. Totally nothing wrong with that. Nothing wrong with that at all. Unemployment rates in the euro is 5%. Ooh, that's quite bad. Retail sales, not good. Okay, that's not looking good. Yeah, interesting. BOE credit conditions. Unemployment rate 6.2 in the euro. So this afternoon in the US, you've got non-farm payrolls. Your favorite one, non-farm payrolls. You all love the non-farm payrolls. I know that. Non-farm payrolls is your favorite. That one where they give you the jobs figures, and yeah, no, I love it. The non-farm payrolls, I used to sit and wait for them every single week. I'd sit and wait for them Thursday and Friday. Here we go. It's the jobs figures. And then they don't make any difference to your life, do they? At all. As far as I know, they don't make any difference to your life. They just move things around slightly and whatnot. But it is good to know what the unemployment rate is in any particular country. So it's forecast at 4.2. It was 4.3. You know, 4.2% unemployment rate's not that bad. When you consider that somewhere like South Africa's got like a 48% unemployment rate that they declare, and it's actually much more than that. And they don't mind. It seems to be fine that half the country's unemployed. That's all right. Doesn't matter. It's fine. But I mean, I know that in the US, if it goes over 5%, they start to declare a national disaster. It becomes quite serious if it goes over 5%. Not allowed to go that high. 4.2, I mean, they like it at 3%. I know that. 4.2 is not the end of the world. That said, that is against a country with 330 million people in it. So, yeah, it's quite a lot of people that don't have a job. But by the same token, the percentage-wise, it's not world-ending, let's say. ASX 200 needs to come down and break to the downside. What I noticed here is it is still in trend. So we're okay. We're short. We're still okay. And it's just sort of coming back up for a retest here, some kind of a retest, some kind of strange retest. So that's okay. It's not too bad. Yeah. So what advantage does an older person really have when they come into trading? For me, it's just, you know, you guys that are older have got the advantage of knowledge, the advantage of having been there, done that, and the advantage of capital as well. A lot of you will have a lot more capital, a lot more savvy when it comes to money. Whereas the youngsters won't. And also you won't get caught as quickly into believing that you can make $1 million in a day from $1,000. You know, you'll think about it. You know, you'll be like, nah, come on, I've seen this all before. You know, it's like you spent your whole life And you've all been there, especially in the 70s. I love this, where the guy stood on the street corner with a little board over him, said, the end of the world is nigh, it's coming tomorrow, or whatever the case. Oh, those guys were always advertising the end of the world tomorrow. And the world never ended, did it? It's still here, and they're still around. They're still here. They're still doing the same thing. And I'm starting to see the same trend with trading. Like, everybody's like, oh, you can make $1 million in a day, and I made $100,000 doing this. Just work it out for yourself. If I'm making $100,000 every day trading, okay, if I'm making these trades, imagine how much money I'm going to be making. It's quite insane. Huge sums of money. But trading's volatile. So if you make 100 grand today, it'll probably take it away tomorrow. The difference is with investing, as I showed you guys on Tuesday, that grows and it builds, and it can become those insane amounts of money. If you leave it alone, it'll grow, and it'll grow to those huge sums of money. And that's real. NFP makes the markets more volatile, stops out a lot of weak hands. Yeah, non-farm payrolls are actually funny. I love it when the Fed has their little chat as well, because you get those huge wicks going up and those huge wicks going down, and it just sweeps the market, just sweeps everybody out. What normally happens with that kind of news event, when I say keep your eyes on the fundamentals, I'm talking about the bigger fundamentals, the bigger things. For example, if Donald Trump resigned from his position today, that would be important, okay? That would affect the markets in one way or another. But if non-farm payrolls come out today, I don't think that's going to be a big deal, right? And I used to sit and wait for these things every week like an idiot, and I stopped doing it long ago. But it is interesting to see what the figures are. But what it does is, you think, because you get this result, let's say it's forecast at 4.2, and you think, oh, it comes out at 4.2, that's going to be positive for the market, or it comes out at 4%. Major positivity for the market. Buy, because the employment rate's good. It's good. It's getting better. It's getting better. Everyone's getting employed. The inflation must be going well. So let's buy the market. So what you do, you buy, and then it goes red. And you think, what happened there? So you get out, and then it turns around and starts going positive again. So you think, well, I was right in the first place. You get back in again, and then it goes red again. You see, that's what NFP does to you. And the other jobs figures and CPI and all the rest of it. They mess you around, something horrific. And then they make some excuse that, no, they read the report, and inside the report, and because they took information from last month and they put it in there, and all these complicated little things that they bring in, this is why this happened, right? So that's all information that you weren't privy to, that you didn't know about, that you didn't have. And so you just went completely the wrong way. The best way to handle these little small unemployment rates, non-farm payrolls, participation rates, all these little things that come up, best way you can handle them is to ignore them and to leave them until they've settled down. So if something starts happening, if it comes out and it starts moving up, just sit back, sit in your hands and don't touch it, right? Just leave it alone. If you're in a trade, maybe move your stop loss further out so you don't get stopped out or something like that. But if you're not in a trade, don't take the trade. Wait until it all settles down, normally about 15 minutes afterwards, and then you can start playing again. If you're a day trader, you want to wait for about half an hour around that thing, 15 minutes before, 15 minutes afterwards, maybe 30 minutes before, 30 minutes afterwards, before you get back into your 5-minute trading schedules and all the rest of it. News is just another excuse for market manipulation. You know, it's kind of strange what people do and how they read into these things, but yeah. My brother started with $1,000, made $1,400 with no knowledge and blew it. Short-term greed is reckless, slow, steady wins the race. Alexander, that is 100% true. Slow and steady will win the race. As I said to you at the beginning of the show, you know what I found really interesting was, like that guy that's, I watched the video on the trader, the day in the life of a trader, okay? And I didn't watch the whole thing, I watched the first few minutes. And the guy says, I get up at 3:30 in the morning because I got to prepare for the markets. And I was thinking, what are you doing? What are you preparing for? What are you actually doing in between 3:30 in the morning and 9 a.m. in the morning? What are you actually doing? I don't get it. I've never in my entire trading career got up at 3:30 in the morning to prepare for the markets. You know how long it takes you to prepare for the markets? No, seriously, it's crazy. Absolutely crazy. I mean, what are you actually doing? What are you building there? What are you trying to do? No, come on, man. Come on. I don't know. That's BS. And I think they're just trying to get you to get into trading or something and make it like somehow it's like it's a Musa thing or what. No, it's not, guys. It's not that. That's not how it works. I get bored trading at the best of times, and now you want me to get up at 3:30 in the morning and do what? What exactly do you want me to? If you guys know what you're doing at 3:30 in the morning to prepare for trading, please tell me. I'm waiting to hear from you. Tell me exactly what you're doing to prepare for your trading day. What are you expecting to happen? Okay, maybe if you're trading some market at that time that's not in your time zone, okay, then bully for you. Why are you doing that? Why would you do that? That's not necessary, is it? Trade a market that's in your area. Get up at a respectable time. No, I don't get it. I really don't. And I never will. I never will. I traded news too, lol. Yeah, trading the news is a biggie. You know, like I say, if you get older, you kind of understand that these are things that you don't want to be doing. These are things that you want to leave it alone. You don't want to start playing around with stuff like that. You know, just look for the trades, take the trades, manage the trades. You know, I come in the morning, I look at the trades, and you guys know I put the trades out every single day. I put the trades out, okay? And I'm not taking all of the trades. These are the trades I'm looking at, right? I put them out every single day on the post, on the YouTube post. Okay, they're there. It's okay. It's in the members area, but it's there every day. All the trades that are available. You know, it doesn't take me hours to look at that. I come in, I look at the trades, I look at the market, I go into my favorites, and I look and I say, US dollar today. Oh, what are we doing with that today? No, absolutely nothing. I'm not doing anything with that. Not interested in that one. Oh, Great British Pound, Canadian dollar. What we're doing with that? Nah, it's in the middle. Not doing anything with that. I mean, I could go through all of these, and I'm not going to bore you with this. We go through all these. Oh, what am I doing with gold? Oh, we're already in it. We bought it. It's long. It looks fine. We'll stay with that. But if I hadn't taken it, I'm taking my trade long. I'm putting my stop loss in place. I'm putting my take profit in place, and I'm leaving it. After about an hour or two, I've got my trades in place. Everything's fine. I can do something else, like make a video for you, or go to the beach, or go for a walk, or whatever the case. I do like to go for a 10K walk sometimes. I don't need to sit in front of my computers and charts and things like that. I spent years doing that when I was younger, when I was a young fool. I had computer screens all over the place, and I had different computers running. I had all these different monitors. What for? I mean, I can't answer the question myself as to why I had all these monitors all over the place, because I didn't have a 50,000 Rand a month Bloomberg terminal or anything like that, because that's insane. Who's going to pay that for their trading? I just had my normal trading charts with my normal stuff, maybe a couple of heat maps or this, that, or the other, but I found myself being a trader, and that is the person who's always looking for shiny tools to add on. You know, put a bit of that and put a bit of that and have some numbers running here and all that you really don't need. And it took me years to realize that you just got to bring it back down to basics and simplify it. Now, if you think about it, even now I'm an idiot. I've got more than enough monitors here that I don't need, right? But when it boils down to it, if you go on holiday on the beach, you can do it on a laptop. I found myself watching trades on my mobile phone. What am I doing with all these monitors? What's the point? Really, it's insane. You don't need it. All you're doing is looking for a trade. You look at a trade, you say, well, there's a trade. Let me take that trade. Trade taken. Now what? What are you going to do? Sit there and watch it all day and just see if it goes up and down? Because I suppose that's what day traders do. But what's the point of that? right? You've taken the trade, you've made the decision, you've put all the plans in place to take that trade. So why are you going to start doubting it? Why are you suddenly going to doubt yourself? The trade's in. You've got the trade in, leave it. Now all you're doing is looking for the next trade, because that's what your job is, to look for the liquidity in the market and to look for your next trade. So all you're doing now is looking for your next trade. Now you could spend all day looking at all these different things that are available to trade. You could spend all day doing that. Of course you could. But then you have to ask yourself this one question, and that is, how many trades am I going to take? How many trades am I prepared to have open at any one time? And if you're only going to have 5 trades open at any one time, or 10 trades open at any one time, then that's your limit. Then what's the point of looking for more? Yeah? You don't need more. You're keeping yourself busy, and you find yourself creating little spreadsheets and creating little things in the market that you don't need. You just don't need them at all. I've studied Bitcoin. I've studied the move. I've studied the short. What more can I do on it? What more can I do? I know what my point is, what my stance is on it. I know what my feeling is on it. And I know that if it breaks to the upside, then it's going the other way, and that's my stance. I'll know what it's doing. I don't need to spend hours and hours and hours researching anything more into it. It's very straightforward. Same with gold. I mean, what do you want me to say about gold? I mean, how much more research can I put into it? It's bearish, it's going down, it's hit support, it's at a round number, it's at 4,000, it's bouncing out of support. Looks like possibly a good buy. My stance on it, you all know, is to go long, and it'll probably bounce and give me some money. And if it doesn't, well, then it's going to go the other way and take out my stop loss. I can't do more than that. There's no point in me sitting here researching it for hours and hours on end and trying to squeeze more information out of it. What am I going to squeeze out of it? It's not an orange. I've chosen my trade. That's it. That's what trade. You see, the more boring it is and the more straightforward it is, the more you'll make money. And the more complicated you make it, the more you're probably going to lose money. So don't get too complicated. From my trading experience, I found if the trade's not going your way by the 5th bar, the odds of it being profitable is very low. Yeah, you know, every trade you take, I agree with you on that. And every trade you take is often going to move against you slightly. Probably move into drawdown and then go up. But they're not always that bad that, you know, if it hasn't worked out by the 5th bar, it's never going to work out. It's not always that bad. Sometimes it'll turn around and it'll work out for you. But I mean, I've seen some traders out there where they've gone seriously into drawdown, like heavily. That I don't know if they move the stop losses away or if they just don't have stop loss, but I mean, where they've gone mega into drawdown and then come back and manage to make a huge profit, and then they make a video about it. Now, whether it's true or not, I just don't know, right? I mean, but I've experienced it myself where I've gone into drawdown and come back and been fortunate enough to make a profit. But there's been a few of those go around, and so yeah, that would, you know, that would kind of negate the 5 candle theory, because obviously it would have been more than 5 candles, and some of these people were talking about losing $170,000 and then making $90,000, and I don't know, but that would have negated that theory. And I've seen it before as well, where it's gone down further than that and come back and worked its way back up. But yeah, you're quite right. I mean, if it's gone, it's gone. It's not much you can do to get it back. It's going to be difficult to get it back. I accept that as well. Totally. But it's funny how people think, because there's a fallacy in the market as well, where somebody once said that if you're trading forex, right, no matter what you do, it's always going to come back, right? So what they're saying is, if you go long here, if you go short here, right, by mistake, and it goes up, it'll always come back to this level and you'll always be able to get out of it. It'll always cycle around. Okay. So you don't need stop loss, in their opinion, on leverage trade. You don't need stop loss because if you've got enough deep enough pockets, it will go up, it'll come down, it will go down, it will come up, and it will cycle back. Trouble is, how much time do you have to sit on that? And you see this euro US dollar, a couple of years ago, it was at 1-to-1, right? But just before that, it was at 130, somewhere around there, 130. If I remember correctly, it was about 130. You guys can correct me if I'm wrong. But I remember it being around about 130. Where are we now? 113 odd, 114, okay? Oh, there it is up there, 114. Okay, 114.09. So it's at 114 now. So it's somewhere between 130 and 1-to-1, right? It's in the middle. It's right in the middle. I haven't seen it get back to 1-to-1 yet in those couple of years, and it's been a couple of years. So had you gone short when it was 1-to-1 because you thought, well, it's going to break through 1, it's going to go down, and it's going to get just worse and worse and worse and worse, so we're just going to keep on going short on it, and it's going to go down to 90 sort of P or whatever it is, cents US dollar. Okay, right, so it's going to go down below the 1. Now you look at it and think, oh, it goes long, goes back up again, and since then it's always been hanging around the 120, 115, 118, 117. That's been around this level for an insanely long time. So that blows that theory completely out the window, because it still hasn't reached back to 1-to-1. So had you gone short there and this went long, you'd be in this trade for a couple of years holding on to it. I can't remember the exact dates, but you would definitely be in this trade for a couple of years, waiting for it to get back down to 1-to-1. And I don't think it's gone back much below 110, to be fair, at this point. Maybe you'll get lucky now because it's breaking to the downside. But yeah, no, it's that doesn't work either. I've heard that said in the market. I've heard that said more than once. I've heard it a couple of times where people have said, oh no, you don't need stop loss, it'll always cycle around. Forex always cycles around. No, it doesn't. No, it doesn't. Sometimes it can sit in one place for a really, really, really long time. I mean, a good example of that as well, besides the euro US dollar, look at the US dollar Canadian dollar that we spoke about this week. It sits in this range between 135 and 140 for an extended period of time. Now it breaks up between 140 and 145. Now it's going to sit there for an extended period of time. So what you're telling me is that this is always going to cycle around? No, it's going to stay there for an extended period of time. Now, I know that when it's above 140 to 145, it doesn't stay there long. That it'll probably come back rather quickly. But this level, it tends to stay in for an extended period of time. It doesn't cycle around. You need stop loss. Without stop loss, you're going to get hurt in the market, because you can't sit in it forever, because your capital's swallowed up. And you know, the only one I like to sit in for a longer period of time is perhaps the VIX, and of course at the moment the Japanese yen. That's my favorite, isn't it? Love sitting in the Japanese yen, because the Japanese yen, we all know it's going to come down now. So yeah, I'll sit in that one for an extended period of time and pay the swaps or whatever. But you can't do it with all of them. Can't do it with all of them. Just this one I know for a fact is going to swing around, so that's why I'm sitting with it. And technically it's now broken. By the way, this morning when I was calling it, it hadn't broken. Now it's broken the trend support, so that's good news. But it hasn't broken this level yet. There's always a trade-off of having your capital stuck in a loser and having it available for other trades. Yeah, well, the trouble is, if you got it stuck in a loser for a couple of years, that's not a good trade-off, all right? If you've got it stuck in for a month or so or two, that's okay. You know, we can all deal with that. That's normal. That's having it in the VIX, having it in the Japanese yen, whatever the case. And these are trades that, you know, you've got a certain particular plan surrounding it, right? So for example, the Japanese yen, I've got a plan for it to go to 150. So I'm prepared to sit in this trade for an extended period of time, okay? and pay the money because I know I'm going to make big money on it. And the same goes for the VIX. I mean, the VIX often makes me about 40 or 50,000 because of its move. So I'm prepared to sit in this for an extended period of time and pay, because, you know, if I get it in at a very low 15, I haven't got in yet because it hasn't reached my level yet. But if I get in at that level and then it spikes to those levels, it usually makes me quite a large sum of dosh. It pays off. So it's worthwhile holding on to that. So I have a plan, a strategy with that. So that strategy sits with those shares. But all the other stuff that I trade, I don't want to sit in it for too long. You know, a week, 2 weeks, a couple of hours at best. If I can get out in a minute, even better. You know, I don't want to sit in them too long because they cost money to sit in them, and they cost time, and your capital's tied up in that trade, and you don't want to be your capital tied up in that trade for too long, because there's, like Mickey says, a trade-off as to profits as well. Because if you do make a large profit, but you could have made more profit on 5 other trades, you know, there's a trade-off for that. But there's also the human psychology of, but I'm going to make a lot of money on that one trade, so I know I'm going to make money on it. I'd rather stay with it. If it loses, then it becomes disappointing. But if it does win, then you've got that trade-off of, look, I won a lot of money on it, so it's worth my while staying in that trade. That is something to look at as well. So, but for example, how confident am I on gold? 50-50. I'm looking at it as, it might go up, right? Just like any other trade, so it might go up. So this is not one that I want to be stuck in for an extended period of time. I'm looking at it and thinking, well, I would like for it to now start doing something and start making me some dosh, because I don't want to sit in this trade forever, because I'm not that confident in it. But then on the Japanese yen trade, how confident am I in that? Well, I'm 85% confident that that's going to work out in my favor. So that one, I'm prepared to sit in it for an extended period of time, because I know it's going to pay the bills. It's going to pay the costs. And also, being short in a trade doesn't cost you like being long in a trade. Longer trades in leverage trading cost you more money. Right. So we're short on the US dollar, Japanese yen, so it's not as expensive, effectively. You're long, that gets expensive. And I'm long on gold, so that could get costly. But I want to stay long on gold for an extended period of time. New Zealand dollar, US dollar did not reach the support. Didn't go all the way down to the support, so but it is sort of curving around here and starting to look like it wants to go back up. That's great. It does look like it wants to head up near that direction, but I would have expected it to get all the way down into support. But that's okay. It has been rather negative though. It has been rather wanting to go down. And this Australian dollar, Canadian dollar that we took on Tuesday, just on willy-nilly because somebody said it was there and it looked like it was going well. It's just dropped off, hasn't it? It's done nothing. Could have done a lot more with this. I mean, I would have expected that it would have started going up by now. But what I have noticed is on the left, and you must always look left, guys. Always look left. And if you look left, you can see here that every time that it hits this level, this little level here, it doesn't do much. This one broke through. That level, it hits there, it sort of comes back a bit and it goes up. Hits that level, comes back a bit, goes up. So normally when it hits this level, it doesn't crash out or continue on down. Normally when it hits this level, it sort of comes back into the level and goes up, comes back into the level and goes up. So I was hoping that if it does do this, if it does come back down a little bit, it'll probably just go up again like it's done in the past. Unless, of course, it decides, oh, today's a different day. And you know what? We'll just break through the support, break down, and just head on down to the bottom. And that's the hell. Then that's why we've got a stop loss in place. But like I say, sitting watching charts, if you sit watching charts, what actually happens, sit watching this chart, and you see this red coming about, what you start doing is you start going, well, that's not working out. Let me get out of the trade. So you get out of the trade and you shouldn't have. You should have just held on to it. It's better not to sit and look at them. It's better not to sit and glare at them. It's better to let them just do their thing. Just let them play out by themselves. Just let them move on and make you some money, and don't sit and watch them all day. Like I said, what are you doing at 3:30 in the morning preparing for the markets? Sir Lancelot, good to see you. What's for lunch today? There are rumors that Trump is planning to invade Iran with boots on the ground, but will wait for cooler weather. Seriously? Oh no, here we go again. I love it. Yeah, I'll tell you what. Hopefully it's just a rumor, right? Hopefully it's just a rumor, because I don't know, I'm getting a little bit sick and tired of it, to be fair. Really? I mean, would he really do that? I mean, is he really planning to do something like that? Ah, no, it's crazy, isn't it? I mean, there goes the oil price again if that happens, isn't it? You know, and we just got it down. DAX longs for lunch for me. Where you go. We got the DAX longs. Where's the DAX? Let's go and have a look at the DAX here. DAX longs. Ooh, Sir Lunch, watch out for the resistance, eh? There we go. Big resistance level at the top here. And I am a little bit concerned about the indexes at the moment, because I'm seeing them roll over. Not the Germany 40, of course. The Germany 40 is sitting in this range, up, down, up, down, up, down, up, down. It's hitting that resistance at the moment, so I would be cautious staying long on it. If you are long on it, maybe holding for that point and pushing your stop loss up behind it to take as much money as you possibly can. But I don't think it's going to break through, and I'll tell you why. It's because I'm looking at the S&P 500, and I'm seeing it kind of roll. I'm seeing this kind of rollover. I'm not confident on the earnings season that we're in. This earnings season, I think, is going to give us a few nasty surprises with regards to the way the economy has gone and the price of oil and stuff like that. Oh, you already closed. Good lunch, that. Good lunch. So yeah, just so that everybody knows, I'm just thinking that this is rolling a bit. And also, I mean, if you do look at the DAX and a few of the others, definitely coming into the resistance level, might actually become quite a decent short, don't you think? I think it might become quite a decent short soon. Get a red candle coming down off of that. You know, back down the other way. Not bad. It might actually give us, because it's hit this quite a lot. It's hit this quite a lot. This level seems to be really, really, really important. So that being an important level, there's a good chance it will hit that and just dump. So yeah, but a good trade. Well done, Sir Lunch, and good money that. Good money that. Nice if you got it nice at the bottom here. That would have been pretty decent one as well, eh? Yeah, lovely. Like that. But as I say, the indexes to me at the moment are looking kind of iffy. You know, they're looking kind of like they're just going to roll. Like they're just going to roll over. And that's the feeling I'm getting on it, to be fair. But otherwise, yeah, not bad. See, even this ASX 200, I took it short based on the fact that it looked pretty good. It's come all the way back up, hit the resistance, come down. Now it's coming back up again, retest again, and then come down. It's really giving me a headache coming down. I would have hoped it would have gone by now, because when it was really heading down quite nicely, and now it's turned around and come back up again. It's just following the other indexes again, obviously, and trying to hold on for dear life, I suppose. But yeah, you could get quite a good trade out of this as well, even now. This is coming back up for that retest. The red candle down off of here. Another good short trade coming down off of there as well. So that could actually be quite a decent trade as well. Not bad. Not bad at all. The Nikkei. See, look there as well. The Nikkei is breaking its levels. It's breaking its channel. Not to say that it hasn't broken its channel a couple of times in the past and gone back up, but it looks like it wants to break to the downside now as well. And the support's all the way down here. That's quite a low level to get down to. So if it does break and break all the way down to here, it's actually going to be quite a decent move as well. So even the Nikkei is looking a little bit iffy, looking like it wants to drop off. All of these indexes look like they want to drop off. Now the big thing here is if, like Mickey says, there's the rumor that Trumpy wants to go and invade Iran again. If he does that, now let's just look at this. If oil gets all the way back down to the support at 62, and he does something like that, imagine the buy. Imagine the buy at 62, probably all the way back up to 120. That's going to be an insane trade on oil. Come to think of it. I actually got out of my oil trade too early, but it actually took the stop loss, so while it was in profit, it was a trailing stop all the way down here. I moved it up quite close. because I wasn't sure, and then it came back and took it out, and now it's gone a little bit further. We could have made some more money there. Do you think the World Cup has had any influence on US dollar strengthening lately, or would it be a drop in a bucket for Forex? No, it would be a drop in the bucket. It wouldn't affect the US dollar in any way, shape, or form. Let me tell you something about the US dollar. It's manipulated. There's no two ways about it. It's got nothing to do with World Cup or anything like that. And what would have an effect on it would have been the war in Iran, the geopolitics. That would have had a massive effect on it in one way or another. But the way they manipulate currency, okay, you saw it now with the Japanese yen. We were talking about it earlier. The Japanese yen, how it was down here at the bottom. I'm just trying to go back. Monetary base, okay? So what have they done here? Effectively, what they do, it's so difficult for anyone to grasp this, but money in a country is finite. They make a certain amount of money, right? And then they put it into the market like Monopoly for you to play with, right? To use, okay? It's ridiculous how it's taxed and all the rest of it, but countries make money based on the business they do with other countries and imports and exports and a whole number of other things. So there's a couple of countries in the world that don't need to tax the population, like Dubai, Monaco, etc., because there's enough money made on the way the country is run. Because effectively, when they put the money into the system, it's so that you can use it, and then they're just taking some back. They could just keep it. It wouldn't make any difference. So what they're doing is putting money into the system, and when they put that money into the system, it's based on the assets and liabilities of the country. So it's sort of the value of the currency is based on the value of the country, right? Same sort of thing. So the more currency there is, then the weaker it is. So if you take some currency away, then it becomes more valuable because it's based against the assets of the country. That's trying to explain this in the simplest way possible. So in other words, if you have a building, right, and it's worth a certain figure, and you have money, and then you take some of the money away, the money becomes worth more because it's based on that building, right? So that's an IOU, because that's what money is. It's an IOU. So that's how currency is manipulated. It's simple. You can, as a government, you can push money in and fill up, or you can pull money out and empty out. And if you pull it out, it just makes it worth more because it's in circulation, right? So the money that they put in circulation is calculated against the assets and liabilities of the country. That said, if you have damage to the assets and liabilities or costs or debt or whatever the case, then that also obviously is going to have an effect on the value of the currency. So the more debt you apply, the more currency valuation is going to change. There's all these different things and factors that come into it. And if you want to know more about it, go to university, get a student loan that you're going to have to pay back and do a business course. And then you'll learn all about it. But you'll have to pay the student loan back and you'll be bankrupt. So it's going to be quite complicated, isn't it? It's not going to work out too well. Nah, don't worry about it. Yeah, no, it's absolutely crazy. But yeah, that's the basis of it, right? So that's the basis of it. So no, a World Cup is not going to have any effect on it. Not in the slightest. Not in the slightest. In a smaller country, for example, a country like South Africa, that might be something worthwhile. That might be, it's a small little country, and that, well, not small, but we're not tiny, but yeah, a lot of money coming into our country from, for example, tourism and that sort of thing is worthwhile to us, and that would strengthen us in a big way. Monaco, for example, is strengthened on tourism and the Formula One Grand Prix and that sort of stuff. It grows. Dubai lives off tourism and people coming into the country and what have you. So bringing money into the country and buying stuff and what have you. So smaller countries like that, yeah, that makes a difference. But America, it's a drop in the ocean. It's not going to make a big difference to their currency in the slightest. Might be having an effect on the Canadian. I don't know. Can you explain in simple terms why gold has gone up in price so much in the last 10 years or so? Thanks. Gold's a a wonderful one. I love gold. And here's the thing, right? I'm going to give you the simple answer. And the simple answer is this. The reason the gold price has changed, inflation, okay? The value of gold is based on the value of gold. Gold will not make you rich, ever, right? It's a good trade. It's great to trade. You can trade with gold. You can buy and sell it based on price up and down because it's valued against the dollar, etc. Okay? So you can make money from gold on a short term. But in the long term, if you bought the S&P 500 50 years ago and you'd bought gold 50 years ago, the S&P 500 would have made you insanely rich over that 50 years, and gold not. Gold would not have made you anything. So how can I explain this in the simplest terms, right? So gold, for example, is a precious metal, right? And for years, I mean, I spent years in the 80s and 90s watching it mill around between $800 and eventually it got up to $2,000, but most of the time milled around 1,000 or 1,600. And I used to have this guy, who used to be on television, he used to say all the time, gold's the thing, gold, buy gold, gold's gonna become whatever, gold's gonna be the biggest thing since sliced bread. And it just stayed there and stayed there and stayed there and stayed there. And he's an old man now for sure, much older than me. Poor guy. I mean, he really believed in gold. And gold only accelerated in the last couple of years. Now, what you have to look at when it comes to precious metals, oils, commodities, things like that. When people invest their money and they take their pension funds or they just want savings or whatever the case, and they go to these big institutions, they have to invest the money somewhere. They have to put it somewhere. So generally they put it into shares and they put it into indexes, they put it into Forex, and they put it into these different investments, okay? Different investment portfolios. And when the world starts to go a little bit pear-shaped, they have to protect that money because they can't sit with cash. They have to make money. So they take the money out of the indexes and they put it into commodities. They put it into gold. They put it into oil, things like that. They move it around. And that accelerates the price of gold. But also what accelerates the price of gold is the value of the currency, for example. So the US dollar's currency move will affect the price of gold as well. But at the end of the day, if you look at the value of gold, it's actually undervalued based on what it was 10 years ago and what it is now. It should be worth much more if you think about it. But effectively, if you take inflation, you take the value of the dollar, the value of any currency in the world, and what's happened to those currencies, particularly the dollar though, because that's what it's based on, you're going to get a valuation based on gold, what it was then, what it is now, that sort of thing. The S&P 500, for example, at 7,000, it was at 2,500 just the other day. You know, shot up. It's a lot to do with the, hopefully that didn't make too much noise. The inflation of the country, it's got a lot to do with the movement of the growth of the businesses and that sort of thing. It grows, it gets bigger, and money devalues and things swell up, let's say. It's difficult to explain it that way. I should actually find an easier way to explain it to you, but yeah. Basically, gold should be worth much more than it is, to be fair. It should be worth about 7,000, actually, if you take into consideration where the world has gone in the last 10 years, inflationary-wise. It should be worth a lot more. Gold's getting more expensive, money getting a lot cheaper. I wouldn't say money's getting cheaper. But it's all to do with an inflationary scenario, okay? And that causes, you know, money to lose, like the money's losing value, the gold's going up, right? And besides that, also the way the money flows and the way investments flow as well, which way they put the money. Because you must remember, gold wouldn't pick up value if people weren't buying it, right? So if somebody wasn't investing in it, then it wouldn't gain any value. So it has to have some balance. It's got some balance. It's effectively like a currency itself in its own right. It's its own currency. And it's just that you're valuing it against the dollar, so that's going to have an effect on the price of the gold. So if the dollar moves, the price of gold moves. But if people invest in the gold, the price of gold will also move. Yeah, that's basically it. Interesting though, but gold's a funny one, like I say. It's always just sat at those prices and done just about absolutely nothing. It's never really grown, and in the sense of it would have made you money over a portfolio. Like I say, if you'd been invested in the S&P and made 10% per annum for the last 50 years, you would have done pretty well. But gold not. You wouldn't have made that much out of gold at all. Gold, it would have grown, but not to the extent that the S&P would have grown your money over that period of time. Unless, of course, you were able to somehow trade it up and down, you know. Like I say, the advantage of being older is seeing these things happen in the past. I've heard that most of gold has been mined already, so it has to go up in price. No, that's a rumor. Most of gold has not been mined already. Do you know there is still plenty of gold? Tons of gold, tons of gold. So don't worry about that. There's always going to be enough gold. Believe me, there's enough gold. Just in this country alone that I'm living in, buried in gold, okay? Tons of it, tons of it. There's enough gold. Believe me, there's enough gold. So no, that is BS. No, that's not going to affect the price of gold in any way, shape or form. Where that actually was said though, was with Bitcoin. They said no, that Bitcoin's got a finite amount. I can't remember if it's 21 billion or 28. But anyway, sorry, I can't remember the figure. But there's a finite figure on Bitcoin and it's almost reached that. It's 21, it's like at 19 or something like that. So they expect that if all of Bitcoin is sold, that the price has to go up in value. But my problem with that one is Bitcoin is fresh air. It's built on fresh air. It's got there's no asset to it. So 21 billion what, you know? So yeah, that one's a bit tricky. But yeah, that's why I've heard that one before. I've heard that there's a finite amount of Bitcoin, for example. But there's definitely not a finite amount of gold. It's available everywhere in the world and you can dig it up wherever you like. In fact, you can still find it in rivers. People are still panning for it in certain places. And some places in Africa, you actually find these guys digging giant big holes and digging for gold and stuff like that, digging for metals and what have you. You'll be surprised. It's out there and they're still digging for it and still trying to get it out. It's amazing. So yeah, no, gold will always be available. And at the price of gold now, it's good for those guys if they get a little bit of money out of it. It's valuable. Yeah. So I think what you might have been confused with what they said about the Bitcoin. That might be something to do with that. But that doesn't convince me on Bitcoin either. If there's only a little bit of Bitcoin, so be it. No big deal to me. It's still going to have the same value. It really doesn't matter. It's built on, and it's not really built on any particular asset value, is it? So what am I going to value it against? Effectively, becomes tricky. US dollar, Japanese yen, where are you? Come on, you need to go down now. Would be nice if this now starts to fall, but this is being manipulated now at the moment. I expected a much larger fall because, you know, the figure that they expected and the figure they got was a lot more. So maybe they'll push harder. Maybe they'll try for more and try and push it down a bit harder. Because I know that Japan wants to push this down hard. I want to push it down all the way down to the 150. So they're not going to be happy with it at this level. That's for sure. There's no way they're going to let it lie here and say, oh, that's good enough for us. No, it isn't good enough. I can tell you that now. They're going to push this down much, 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 much harder. So that we'll see happen in the near future. New Zealand dollar, US dollar. Johnny, you were talking about Great British Pound, Canadian dollar. Where's your exotic pairs today? Come on, tell me about your exotic pairs. You like to trade those exotic pairs. Only trouble with those is the leverage is heavy on them. Great British Pound, Canadian dollar. Ooh, it's running out of steam. Look at that. Broke to the upside, running out of steam as well. So a big move up in the middle here. But it's not really worth much of a trade, is it? Not really much going on here. Australian dollar, Canadian dollar. That one is interesting me because it, you know, you got Great British Pound, Canadian dollar shooting up, US dollar, Canadian dollar shooting up. And then you've got this Aussie dollar, Canadian dollar, which is going, we're not going to do much today. We'll just hang around here, shall we? And just going to the local pubs. It's not really going anywhere, is it? It could do with a bit of move. But okay, I'm sure it'll find its feet eventually. Eventually. It's always eventually. What's the S&P doing? That's very, very small candles, but this is before opening in America, so yeah, you're not going to get much of a move here, are you? It's going to be a little bit slow. There's Johnny. Any short for one of these? Great British Pound CAD, Great British Pound Aussie Dollar. So, Great British Pound Canadian Dollar. You see, my issue with this at the moment is it's kind of just lagging around in the middle. So if you want to short on that, you know, your best bet would be to wait for it to break through this trend support. So if it comes down and breaks through that trend support, then you've kind of got a short, but then it's too close to this support level here. So maybe wait for it to get back up to these higher levels. I don't know why this is here. I don't know why I put that there. Let's delete that. Wait for it to get up to these higher levels. Let me just, I'll tell you what, let me just take this to the day chart quickly. I'm going to have a look at what's going on here, because I don't know why I've put this level up here. Maybe it doesn't belong there. That could be a bit tricky. Let's just have another look at this and just get a level here. So tell you what, let's take this one out. Take it out of the way. Let's redraw the Great British Pound, Canadian Dollar. Let's see what we get. Well, that's interesting, isn't it? Suddenly, we've got a completely new look here. Very tricky one, to be fair. Just going to pull this down just a little bit there. That looks like it's breaking to the upside. And that's quite interesting. We could draw one here, but we don't really need to. Okay. Make it back to H4. I just want to see what we've got here. This is very, very interesting. Look at this, Johnny. It's a breakout. Broken to the upside. So we had all the wrong drawings lying around on Great British Pound Canadian Dollar. I don't know why. They've been there for a while, I suppose. When I draw this in now, these are the levels we've got. So this is broken to the upside. So you can wait for a retest. Wait for a retest. If it comes back and takes the money here and goes up, it's a long trade. For short, wait for it to break down and break through that trend support, because then it'll be below this resistance level again. And then it'll, well, it's now support at the moment, but it'll become resistance. If it breaks through that, then it's going down. At the moment, if it comes down, takes that and gives a green candle up, it's a breakout to the upside. So Great British Pound Canadian Dollar is actually a breakout to the upside rather than a short. So don't take any shorts at the moment. So what I would look at here is wait for it to come down, see what it does on the retest, or wait and see if it breaks down. And that'll give us more information on the Great British Pound Canadian Dollar. So don't jump into that just yet. And the other one was Great British Pound Aussie Dollar. Great British Pound Aussie Dollar. What I'm going to do here, this is Aussie Dollar, Japanese Yen. That is breaking to the downside. That is going to break to the downside, by the way. Great British Pound Aussie Dollar. I'm just going to pull it over and have a look at that quickly. Great British Pound Aussie Dollar is going to do almost the same thing. Okay, you're looking at a very similar picture here. If I take this, I just want to put a line chart on it. Okay, I get a feeling for this. Okay, Great British Pound, Aussie dollar is going into that level. So let's just take it back to H4. Now, if I look at this, it's in the resistance, the Great British Pound, Aussie dollar. So what you're waiting for here is either it's going to break out, and with the way things are being going, who knows? But you could get a red candle coming out here, a bit of a short. Wait for the red candle, wait for the red candle to come down. You get a red candle coming down, then you can take the short. And if you're risk adverse, as I always say, you can just see if it breaks through that trend support and gives you a signal that it's going to the downside, and you can trade it then. Or you can just take it when it comes straight out of there with a red candle to the downside. So Great British Pound, Aussie dollar, yeah, that one you can kind of look for a short on. And then the other one, rather look for the long trade on that. But if the short trade comes about, you can take it, but you're going to have to wait for that trade. Does time in a day make a difference in trading sessions? Thanks. Time in a day makes a difference when you are trading 5-minute charts, 15-minute charts and stuff like that, okay? Because then you're looking for opening sessions. You're looking, because you get a lot of movement in those sessions. But the danger of that is, let's say you wait for the US Open, for example, on the 5-minute and the 15-minute charts. The danger with that is you get these runs, okay? So you get the opening, it shoots up and then it comes back, right? So there's all kinds of different little technical ways of getting around that and figuring it out, and past the prior high and prior low, and you know, all this stuff, okay? But nothing's reliable on those lower time frames. But just to keep the answer simple, if you are trading on those lower time frames, you may well be actually looking for opening sessions, closing sessions, things like that. But when you're trading on 4-hour or daily charts or weekly charts, things like that, then opening a session doesn't mean that much to me, right? Because I'm looking at a picture over days and days and days. So I'm looking at a longer term picture. So when I look at this over the day chart, for example, I'm looking at day candles for a day. So I'm looking at the overall picture over a larger period of time. So the opening session, the closing session, it doesn't mean a lot to me, okay, in that sense. And even on the 4-hour, not as important as it would be. You might want to, if you want to trade within the opening time of that particular market, that's fine. Nothing wrong with that. You're going to get some movement either way on the opening of a market. So if you choose your trade based on a longer time frame, then you're looking at the overall picture over a longer period of time. So opening session doesn't matter that much, but opening session is important to those people that are trading on those second time frames and 30-second time frames and 1 minute and 5 minutes and stuff like that. But even that, like I say, a 5-minute candle doesn't have a lot of information in it. So you're going to get a lot of volatility at the open. So you're going to have to figure out a system that works for you when a session opens as to, you know, what to do, because you can't just jump in. It's just going to shoot one way and shoot back the other way and give you a lot of volatility. It's like watching the Fed news when sessions open on those low time frames. So I prefer to not worry too much about session and look at the overall picture that I see, the overall chart. I see the overall chart. I see what's happening with the chart. I see what's happening with the chart over time, and I decide which direction that chart's going to go in over time. See, what you have to understand is markets don't go up in straight lines. They don't come down in straight lines. They go zigzag always, right? And with that said, I'm not expecting to get an immediate solution to my trade. So when I trade into something like the ASX 200 and I take it short and it goes against me a bit and it goes for me a bit, and I expect that sort of zigzag on the way down. So I'm not looking for an opening session or a closing session on it to get the best trade. I'm sort of just looking at it and thinking, well, it's going to go down. Overall picture, take the trade, leave it in place, walk away and see what happens and wait for it to go down. Okay, so that's kind of where I am with sessions. Is US dollar Japanese, as US dollar gets pushed down next week, is that going to affect US dollar CAD, US dollar CHF2? I guess, no, it doesn't necessarily affect the Canadian. Because the Japanese yen, you see, each currency's got its own life, right? So, for example, the US dollar has affected the Japanese yen, and it's also affected the Canadian, and it's affected a number of other currencies, ZAR and all the rest of them, because of the US dollar movement, right? But if the Japanese yen takes action and turns things around, then it doesn't mean the Canadian's going to do that. The US dollar will still stay what it is. It's just the Japanese yen that's a life of its own that's changing and doing something, right? So a good example of that is, for example, you know, the euro US dollar and the Great British pound US dollar follow each other. But the euro US dollar has been going this way, and okay, now it's coming back into a retest, but it was very bearish and it was dropping down, and you expect the Great British pound US dollar to have been doing the same thing. But last week, the Prime Minister resigned and there was a turnaround and a change. Suddenly there was a difference in the chart. But it had nothing to do with the US dollar, because the US dollar has been pulling the Great British pound, the US dollar, euro down at the same pace. But now the Great British pound had a different political scenario in its own world, so that changed things slightly. So you can't rely on it always being the same, because each currency, like I say, it's got its own entity, its own life, and within that life it's going to move by itself and go up and down in its own way, right? So it's not always going to be just going the same way. So same applies to now US dollar Japanese yen, US dollar Japanese yen. The Japanese yen is taking action, so the Japanese yen will move. The US dollar is going to do what it does, okay? The Japanese yen will move to defend itself against the US dollar. The US dollar will keep on doing its thing. In other words, the Canadian will keep on doing its thing. It's not going to turn the Canadian around. So don't base a trade on the Canadian based on what's happening with the Japanese yen. All right. If it's all about the dollar, they'll move the same way. But it's not all about the dollar always. Sometimes it's about the other currency, and that they're taking action to defend their currency. The Great British Pound US dollar, as we had it on at the moment. Great British Pound US dollar, interesting one. It bounced off support and it's moving up. But the interesting thing about it is it's hit a trend resistance level, okay, which is calling it short. Now, if you play it against the US dollar on its own and you say, well, the US dollar's doing the movement and it's back to normal, and the politics of the Prime Minister resigning and all that in the UK has now worn off and everything's going back to standard, then one would look at this and say, well, it's kind of hit resistance. We've got a red candle going down, very strong possibility, but this is going to go short, and it's going to go short down to this support level down here, because there's the support that it keeps on hitting. This is a very important support. We can actually draw that in properly. And just do that quickly. Let's draw that in properly so that we can all see it, because this red line can be quite confusing sometimes, because sometimes I'm a little bit lazy and I just draw a red line in rather than actually drawing the proper level in. Okay, so, and there is a level a little bit higher up there, but that's your main level. So now we can actually take that out the way, and that's a proper support level. So that's a main level here. That's an area of interest. So what you're looking at, and it can go a little bit higher here as well. There is a sort of level a little bit higher as well. That just gives you a better picture of what's going on. Now you can see Great British Pound. Basically, every time it gets into this level, it sort of bounces to the upside. So that's your level at the moment. So what you could say here is it could go short all the way back down to the support level at the 130. But then it could break out and go to the upside as well. But at the moment, if that red candle closes there, it's probably going to go short. And if you look at the euro US dollar, it's going back into retest, and it looks like it wants to go down. It wants to go short as well. So my feeling on the Great British Pound US dollar is that it's probably, and that's probability, it's 50-50. But the probability is a short trade. Probability. Okay, so if you're looking at the Great British Pound, that's kind of the way I'm looking at it. I hope everybody's liked the video, by the way. And for those of you who don't know me, I hope you're subscribed. But if you don't know me, I'm Rob, by the way. I only introduced myself now, 2 hours into the video. Can you imagine it? Jap 225, is that a triple top on the fourth? It breaks down that possible support. The Nikkei. Where are we? Here we go. Seeing a double top. No. Not seeing a double top here. I would recognize it normally. No. Basically, the Nikkei is in a channel. It's in a channel. It's going up on that channel. It's breaking out of that channel. It's starting to break to the downside. I would say that there's more of a level here, more of a support that it's moving into. So if we take this on the H4, there's an H4 level here. If you take that, you can draw an H4 sort of support level in here that it's moving into. There's no double top, to be fair. It's moving into the support level on the H4. It goes all the way back here. If you look left, it goes quite far back. But that's only on the H4. I've drawn that in, not on the day chart, on the H4. So on the H4, there's a support level here. It's breaking through this trend, but I mean, you can actually take this trend and move it wider because it has moved out a bit. You can actually move it out a bit wider. And if you look at that, it's kind of like moving into the support, moving on to that. Interesting. It looks like it might take that money and go back up again. It looks like it's quite a serious level. It could break through and it could break to the bottom as well. It's very iffy, very 50-50. You know, it's a bit like it could go up, it could go down, it could do this, it could do that. You never know, right? But yeah, at the moment, you're waiting for either a big green candle out to the top or you're looking for a big red candle down to the bottom. At the moment, it's not tradable. At the moment, you're waiting for something to happen. So just wait for that. Just wait for the green candle up or the red candle down. I'm not seeing a double top here, no. Or a triple top. No, this is a trend down. Okay, so if you take that, it's trending down. Look at that. It's just trending down. It's coming into a triangle, effectively. So yeah, no, it's not a triple top. All right, guys, we've been here for quite a while. I suppose I should move on and end the video, and we can go and enjoy the weekend and have a bit of fun. I hope you enjoyed the video. Hope you guys had lots of fun, and we'll have another one next week. We'll be back on Tuesday. Back on Tuesday for another show. There we go. That's what we're looking at. And I hope you guys have a wonderful weekend. Tomorrow, I'm going to bring the video out for you guys. On Tuesday, we spoke about how you can invest and how you can get rich and all that sort of thing. The best way to put your money. And Random was asking about it earlier. So tomorrow, I'm going to condense that into a short from that live. I'll put it out tomorrow for those of you guys who want to watch it, want to see it, want to figure out where you want to go and how you want to invest your money. But let's go and go Boca. Yeah, absolutely go Boca. There we go. Since we can't play football, at least we can play rugby. There you go. Fantastic stuff, guys. I want to thank you all for being here. I want to thank you all for watching. I hope you enjoyed it. Enjoy your weekend. Makes lots of money. And I'll see you back here next week, Tuesday, for another live stream. Have a good one. Cheers. Ciao. Bye.